In this presentation, we will continue on with our comprehensive problem, this time recording the journal entry for the purchase of equipment. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Date's going to be here in cell B15. We are on January 2nd. So we're going to purchase equipment for cash, that cash of $40,000. If we go through our thought process, we're going to say, is cash affected? Typically the first question I would ask with any journal entry, we're going to say it is because we're going to pay cash for the equipment. The cash has a debit balance. We need to make it go down, so we're going to do the opposite thing to it, a credit. So I'm just going to copy the cash by putting a cursor on L5, right click and copy. We're going to put that on the bottom. Note, I'm thinking about the credit first because I'm thinking about cash first, and it's the easiest thing to do rather than think about whatever the debit is first. Typically, cash is easiest to think about, therefore, I'm going to think about it first, whether it is a debit or credit. So we're going to right-click and paste, not this one because I don't want to make it green. We want to put it the 1, 2, 3, values only. Gonna indent this. It's probably already done for you, but I'm gonna do it here. It's good to know. Home tab, alignment group, and increase the indenting. Okay, so now we're going to put the amount that we paid, which happened to be $40,000. I'm gonna put a credit by saying negative $40,000. Now we're gonna have a debit of the same amount, $40,000. I'm gonna do that with a little formula. I'm gonna use formulas whenever possible, by saying negative instead of equals that sign, meaning we're just going to take that 40,000, flip the sign, and make it a positive, and enter. Now we just need to know what that debit will be. What did we purchase? We purchased equipment. So the equipment account is here. It's an asset account. Note what it's not. It's not an expense account. Why is it not an expense account? Because we haven't consumed it. We haven't used it in order to help generate revenue yet. Therefore, in accordance with the matching principle, we cannot put it on as an expense, lowering net income, but as an asset to be something we'll use towards the future. And so what's really happening here is we're giving up one asset, cash, and we're getting another asset of equal value, or else we wouldn't be buying it, of equipment. Both cash and equipment are assets because they're going to be used in the future in order to help us generate revenue. So we're going to copy the equipment in, L10, right-click and copy. We'll put that up here in C15, right-click and paste, 1, 2, 3. So here's going to be our journal entry. We're going to post this now, and in order to do that, I'm going to freeze the panes in order to do that. Remember that you could do this multiple ways, however you think is best to maneuver around the worksheet. You could just use the arrows, that's fine. You can use the scroll bar to move back and forth. You can make the screen very small. I'm going to use the zoom just to show you. I'm not going to do this, don't worry, if you can't see the screen. But you can do that if you want to post everything, if your eyes are good. Mine are not. So I'm going to make it large again. And what I'm going to do is freeze the panes. So to freeze the panes, I'm going to move everything to the right just a little bit so I can see as much of the right side of the screen as possible. So I'm going to select this little icon. Okay, boom. Now we just got the column L flush with the side. Then I'm going to put my cursor in K1 and go to the View tab in the Windows group and freeze the panes. So we'll go to Freeze Panes. And by doing that, if we go to the right now, we can always see columns B through E because the pane has been frozen, and that'll save us pain. So now we're going to go down here and post this. Here's our journal entry. We're going to post the equipment first. Here it is on the journal entry. Here it is on the trial balance. Remember just the terminology as we go through this too. The journal entry we made here, we call that journalizing, to the process of journalizing the journal entry. We made it in the general journal, this blue area. Now we're doing the process of posting to the general ledger. The process of posting, meaning we're going to record this information to the general ledger. The general ledger will be in the same order as the trial balance. The equipment account being what? The 6th account down, 1, 2, 3, 4, 5, 6, something like that. It's going to be in the same order on the GL. That's the point. So we've got the cash, the accounts receivable, supplies, prepaid something, and equipment. So here's the equipment account. In W10, We're on the debit side. We're going to record that 40,000 with a little formula by saying equals and pointing to that 40,000, bringing the 20,000 balance up by 40,000 to 60,000. So here's the 60,000. That then is all going to be on the trial balance because it's going to go there automatically because of the beautifully formatted Excel sheet here. To get back there, we'll go to the left side of the frozen panes and click right one time. It'll pop back over. There we have it. There's the 60,000 we just recorded. We are, of course, or we recorded 40,000 of it to bring it to 60. We're out of balance by 40. Then we're going to record the other side. And note, you probably may not be able to use these items here if the sheet is locked, but it's good to just know where they are. They're in the data, and then, oh no, they're in formulas. And then they're in formula auditing, they're these icons. And that's just gonna point formulas if there's references. I put mine up in the quick taskbar. Okay, so then we have the cash. So here's the cash, it's our first account up top here. It's going to be the first account on the trial balance as well. We want to be on the credit side, so we're on the credit side of cash to post that credit. We are in cell P12, where we will say equals and point to that 40,000, bringing the 80,000 balance down by 40,000, doing the opposite thing to it, to a balance of 40,000. That 40,000 then being represented on the trial balance as well. So we can see what happened here. Obviously, we're back in balance. We should probably check that, meaning the debit plus minus the credit minus the credit minus the credit is in balance, 0. So that is good. And we can see what happened is that cash, of course, went down and we got equipment going up. So one asset went down, one asset went up. According to the accounting equation, no change up here because they're both in this section, both in this category. And remember that there's no happenings to the income statement here. Nothing happened even though we paid cash because we haven't consumed what we bought. We bought something that we basically is going to be an investment. All these assets are pretty much, you can think of them as kind of investments. They're all things that we're holding on to. We're going to consume them. They're going to be used up sometime in the future in order to achieve that goal of revenue generation. It's also important just to note the relationship between these accounts as we can see them when there's not many accounts here, meaning we've got cash, assets, we've got equipment. That adds up to 100,000. Who has claim to that 100,000? No liabilities yet because we haven't got taken out any loans or anything like that. It's all the owners who have claim to that. 40, 50, and 10 respectively between Smith, Jones, and Brown. That's the 100,000. So that's the relationship here, which you can also see, of course, with the accounting equation. For more accounting information and accounting courses, visit our website at accountinginstruction.info.